Hello everybody. Welcome back for another video. Do hope that you're all doing well and that you're all having a fantastic day. Yes, I am back. I have been away for a while. Very long story, but I am back. Thank you for all the support over the last, it's been about a week and a half, 2 weeks or so. And without further ado, let's jump right into it. So, I missed a lot, but then came back and read all of it. I was getting hints of it over the course of the last week or so as well. You might remember I was also posting on Twitter. Very big thank you to everyone out there who was like, "When new crazy video?" And I was like, I'm away, so I do apologize. So the largest bulk of the news for today, if you will, has to do. There's a lot to cover. I don't know if I said that already. There is an immense amount of things that we have to go over, that we need to discuss, so that you can properly understand everything that's really been going on. And I even give you, in the last 55, 60 hours, random weird number, but it'll make a lot of sense in just a little bit. Sometime last week, a number of things actually took place, and the more newsworthy, or that made it more into the news of these things, was the collapse of something called the Silicon Valley Bank. For those of you not looking at the screen, it says Silicon Valley Bank collapses, fears of financial crisis after bank used by U.S. tech sector fails. This was one of the largest banks in the United States. We had last week, even just from me scrolling on Twitter and me clicking on links and looking around, this gave a lot of people a very clear view into what it meant to once again be in the 2007, 8, 9 crisis. I spoke with a number of friends, and I understand not everyone is going to be as into finance or has to do it daily like I do. So I was announcing to a number of friends that things might get a little bit shaky. And I was, have you seen the news? And no one saw the news. No one knew anything of what was going on. And even more so, I spoke with a number of friends and I was like, hey, this looks like it might be another 2008. And they were like, what does that mean? And I was like, well, when everything collapsed. And they were like, I don't remember everything collapsing. And I was like, okay. So during the collapse of these two banks over the course of the last week and a half and or 2 weeks, like I said, the larger one was the Silicon Valley Bank. Part of the issue with this is the hyper erosion and re-realization of the fact that banks I can't even say in America, banks around the world are garbage. And that's not me saying it from the perspective of a cryptocurrency user, a cryptocurrency holder, someone who invests in the crypto market. It's simply just a fact. When I talk about the idea of decentralization, or even the idea of something like proof of reserves, when you have the discussion a month ago, remember I told you the entire discussion of proof of reserves for the cryptocurrency space would nearly disappear. Why would it disappear? Because a lot of cryptocurrency exchanges, crypto institutions, cryptocurrency banks, they're doing exactly what traditional banks do. And 9 out of 10 times, that's not holding as much crypto as they say that they have, misusing user funds, misplacement of money, putting money and allocating it other places that it should not be, an expectation of that bank or institution making some kind of profit so that they can make themselves even richer off the backs of people who are leaving money with them. When you discuss the idea of a proof of reserves, especially when it comes to a bank, and even more so in the cryptocurrency world, a lot of people realized that the Silicon Valley Bank and why it collapsed, and you're going to see all the other insanity news in just a little bit, and why it's so spectacularly bizarre that everyone forgot about 2008 and 2009 extremely quick, is that let's say, and I was going to say in the future, let's say even now, let's say at some point you have an entire Bitcoin. I don't know if you're lucky enough to have an entire Bitcoin, but let's go with that. And I go to you, show me your Bitcoin. And you open up your computer screen or wherever you go, and you show me that you have an entire Bitcoin. You have 100 million Satoshis. You know that it's backed by itself. You know for certain that you have that because it's showing it on the blockchain. The issue is that banks do not do this. So you can go to your bank account and you can see, hey, I have a good 7,000 in my bank account. But then you go to the bank. Let's say you and everyone else in that bank tries to go and acquire the 7,000 that you all have. The bank will usually tell you, hey, I'm sorry, you can't take out that money. Do you want to know why? Because banks never hold the entirety of the money that they say that they have. Banks work on a way in a very odd system that they do not expect everyone at the exact same time to try and get their money out of the system. We have been conditioned and told and lied to that banks are the safest place to have our money. Who tells us that? The governments and the people who print the money and the people who own the banks. Why would they say anything otherwise? We're the safest place that you can go to. Of course you can leave your money with us. Part of the issue is, for those of you who maybe were simply too young to deal with the 2007, 8, and 9 crisis, is people realized and learned that when they tried to run to the bank and say, hey, I need my money right now in physical form. I can swipe my card. I can see on the screen that I have money, but I want cash physically in my hand. The banks told them, no, you can't do that. For those of you who remember, there even were people standing outside of banks who were wearing outfits that were very similar to this one. And they were holding things in their hands that would normally deter people from wanting to backtalk to them. Why? Because the banks knew that they did not have the money, but they realized that the public also realized that they didn't have the money. And that's where we currently are right now. People are panicking because they're realizing the exact same thing all over again. Part of the fear of this situation is that if too many people in the public figure out what's going on, it's not that they're going to, while they should, it's not that they're going to rush to the cryptocurrency sector. It's simply that the financial system would once again collapse. There's so much to cover, like you don't really understand, but I needed to give you that backdrop because I did notice that a lot of people didn't really understand what's going on. They simply assumed that this is a bank. Cool. A bank is going down with the banks, not understanding that everything is tied together. When you hear me say in other videos, or why I wasn't surprised about Sam Bankman-Fried or FTX or Celsius or every DeFi thing that collapsed last year, or the Terra Luna US dollar, or the other 15th BlockFi, you name it. Everything that collapsed, it's because these things are always intertwined with each other. So the moment I get indications that this company's working with this company's working with that company's working with this company, this tells me that everything, crypto, traditional, they're all so heavily intertwined, and this is why you may see whales panicking when these things happen because they know, and this is part of the problem, the cryptocurrency space has made sure that it's intertwined itself with the old system, whether by necessity or simply because of ease. We have a system now, and I'm going to move on. I know that the worst part about this is that someone's bored hearing me tell them about reality and how you need to pay more attention to the things that are happening because this is going to affect your money. Not just the prices of your cryptocurrencies are going to go down a bit. These things will continue to happen, but it's only when people realize that we have another system, which is the cryptocurrency blockchain system, which has a baked-in proof of reserves, and you can tell you can't. No one can ever tell you. There's never going to be a bank on this planet, an institution. There's never going to be a company that will tell you that they have 500 million Bitcoin. You will be able to call their bluff immediately and tell them, I know exactly how many Bitcoin there are, I know exactly how many have been created, and I know exactly when the next one is going to be minted and or mined. No one is paying attention. Everyone's so obsessed with the fact that they're making money, that they don't look at the risks of anything else. And this is why we keep seeing all these collapses within the cryptocurrency space. Remember the thing I told you, this was last year or the year before. What's that guy? Magic Mike, the guy from Shark Bait, Shark TV show. Kevin Michael Leary, whatever his name is. When he was a champion of the cryptocurrency space. He was talking about how great and amazing DeFi is. You got to put your money into this. And he was talking about that he made 28% on his money in a month. And he's like, if you're not in DeFi, you're a loser. He was telling everybody how amazing it was until one of the protocols that his money was in, I believe it was hacked, got slowed down, something. He couldn't access his funds. The very next day, this guy is screaming, regulation. We need regulation in this space. Why? Because he's happy. Regardless of if other people are losing money in the market, he made money. That's all he cared about. He was happy. The moment he lost money, the system's a fake. It's a fraud. Don't touch it. Get away from it. I'm telling you this right now. Same exact thing with that. What was that other guy? The Barstool guy. I don't remember this guy's name. Porpachoy or something like that. Remember, he loved Bitcoin. Bitcoin's price is going up. It's absolutely amazing. Bitcoin's price fell down. It's a scam. Get away from it. I'm never touching Bitcoin again. Bitcoin began to go back up. Guess who fell back in love with Bitcoin? So this is where we currently are in all of this. And now let's dive deep into what's been going on. U.S. regulators rushed to seize the assets of Silicon Valley Bank, or SVB, on Friday after a run on the bank. The largest failure of a financial institution since the height of the financial crisis more than a decade ago. Silicon Valley, the country's 16th largest bank, failed after depositors, mostly technology workers and venture capital-backed companies, hurried to withdraw their money this week as anxiety over the bank's situation spread. People heard that something might be going wrong with Silicon Valley Bank. They rushed to their website, or even a lot of people ran to the local branch that's right here and tried to get their money out. The bank could no longer cope with the massive withdrawals of its customers, and its last attempts to raise money did not succeed. Why could they not cope with it? Because banks do not ever hold the entirety of all the money that they tell you that they have. This is a gigantic echo in the sky, on the internet, on your phone, on your tablet, through the internet of 2008. And very few people are paying attention because they don't want to pay attention. So many people ran to try and get their money out. And I think one of the weirdest things, the odd saving grace, is that I think on Saturday and Sundays, a lot of the bank branches were closed or forced themselves to be closed so that they could find some kind of a solution. So this is where we are right now. It says Silicon Valley Bank depositors, people who put money into the bank, will allegedly have access to all of their funds on Monday. That is today. This was said by federal regulators. They said, today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. Can you read between the lines? There were so many people who announced over the weekend that they were going to their local bank to take out as much money as they possibly can because of fear of a contagion. The idea of the contagion is that if one of the largest banks in the U.S. doesn't have enough money, this means every other bank also. They don't. This is not tinfoil hat. This is not me being like, yeah, crypto's better, which it is. Banks do not ever hold all the money that they're telling you that they have. I don't have the numbers on the screen here. You can find it it's definitely floating around. One of the numbers was, I think $10.4 trillion that's deposited in U.S. bank accounts or something like that, or that has been given to the banks. I think only 120 billion or something like that is actually insured. It's like 10% of 100% of the money that people think is insured by the bank is not. And people began to once again realize this is literally why we have Bitcoin. Bitcoin was created not to make Mike Novogratz or the CEO of Coinbase and all these other people millionaires and billionaires. It's to protect you against the system that was going to do this all over again. And it's doing it once again, all over again. When they say that they're doing it to protect the U.S. economy, it's because other banks and futures for stocks and other things over the weekend were crumbling, not just within the United States, everywhere. Because if people within the United States initiate a bank run, everyone else around the world does the exact same thing out of pure fear. If everyone in the world goes to their banks and realizes that they don't have the money, other banks begin to collapse. You heard that a third bank collapsed. Well, now I have to get my money out. You try and get your money out. You and all your friends do it. A fourth bank goes onto the news and they say, we're not doing too well. And this is how it continues. This is how you protect the U.S. economy, by simply saying, okay, yeah. Everyone for this bank, don't worry. All your money, we're going to have you can have full access to it. But even then, this is only, and I mean minimal in this way. If you work in Silicon Valley, if you work in tech, and you have $23 million sitting in that bank, odds are you're not going to take out all $23 million and walk out of that bank and go sit in your car and go, whew, okay. But this gives you the confidence to not have to take out the $23 million. And what has the bank done? It saved its hide once again by telling you, no, don't worry. We once again have all of your money. This is how you build reconfidence back in the banking system. It's another diversion to make you think that your money is safe when it's not. This is why we have cryptocurrencies, and I wish more people understood that. I wish people understand why decentralization is so powerful. Why you look on your computer screen and you see that there's 0.14 Bitcoin, and you know for a fact that you have 0.14 Bitcoin. There's no discussing it. There's no third party. You don't have to walk into a branch. You don't have to walk into a building and ask someone, do I have this Bitcoin? Is it safe? There needs to be no run on the blockchain. The confidence is already there. On top of this news, in what is probably one of the saddest things in the entire world, Bitcoin, Ethereum, and the cryptocurrency markets, their prices rose on the news that the government was going to protect the money of people who had deposited with Silicon Valley Bank. Can anyone tell me why this is sad? Bitcoin, at least years ago, rises under the demise of the banks. Why? Because of everything else I just told you over the course of the last 20 minutes. The idea is that Bitcoin re-solidifies itself not as a means of storage or anything else, but as an institution itself. Bitcoin itself is the institution. When we see that Bitcoin is right, when we see that, we don't need a bank to tell us that Bitcoin exists, or that Bitcoin is there, or that Bitcoin's going to be mined. We don't need an administration to tell us that they're going to back our Bitcoin if our Bitcoin isn't inside the bank or some other thing, because we have the Bitcoin ourselves. So under the news that the US dollar would be fine, the US banking institutions would be fine. For those of you who don't know, the current coins are now up anywhere between 7 to 15%. They rose on the news that the US dollar and the banking system is just fine. Normally, there would be an inversion, but the tightness of the roots around our legs, around our hands, and around our bodies of the old financial institution are just there. No one understands what Bitcoin is for anymore, and I frankly think that no one cares. You know what would, and here's the kicker, as always, what would make them care is if the entire financial system collapsed once again. If we didn't have news that the government was going to back or give money to or reassure people who have money in Silicon Valley Bank, and we went through a 2-year depression, How many people would be like, I wish we had some other system that would have helped us? Why isn't there anything else? Why do banks keep doing this to us over and over? The crypto market is currently up off of this news. It says Biden administration bails out failing banks, vows to hold all responsible. In a shocking turn of events, two major U.S. banks, Silicon Valley Bank and Signature Bank, have collapsed. This isn't shocking. This happens all the time, and it will continue to happen. It's just that this has affected the richest people on the planet. Banks collapse and fail all the time because they lie to everyone who uses them. It just happens that this bank or these banks were lying to millionaires and billionaires within the United States, and they don't take too kindly to that. When other banks and institutions collapse that don't affect or aren't in the United States or in Europe, no one bats an eye. Who cares about those poor people? Sure, why not? Their bank fell apart. That's really sad. But when people with $23 million in the bank lose their money, that's when everyone else begins to pay attention. The Federal Reserve quickly took action, and United States President Joe Biden announced that those responsible for the banking mess will be held accountable. They will not be held accountable. Have any of you ever watched the TV show Succession? It is probably one of the best shows that's ever been made. And I don't mean that in a, watch it. Succession. It came out about 4 or 5 years ago. It's about a very wealthy family living in New York. And basically, not to spoil it, it's not a spoiler at all. Basically, the patriarch of the family isn't doing too well. And his kids basically begin to circle around him like sharks, trying to gather or, be the successor of his empire. But in the show, they show what happens to rich people during situations like this. They basically, they tell you up front, the regulators, hey, we have to parade you around for a couple of days, and they put you on news stations. They, tell people as you stand next to them, people will be held responsible. And then 4 days later, they get a text, hey, okay, it's cool. It all blew over. Why? Because the public forgets very quickly. Because there will be another situation and another instance of something else collapsing. And that then takes precedence over the old thing that terrified everyone else. Do you know how many people got in trouble for the 2008-2009 crisis? None. None of the people responsible. They destroyed 40% of the world's wealth. 40% of the money in the world was evaporated by the banking system, by the bankers, and none of them got in trouble. There was one guy who worked in an office. He got in trouble. He became the scapegoat. No one will be held responsible for this because in a week and a half, something else new will happen. Something else will take precedence. Something else will terrify the world and the community. And then eventually we will hear in a random news report that someone was backed, someone gave the money, someone did this, someone did so-and-so. Money moved around, and now everything is once again well with Silicon Valley Bank and with Signature Bank. On this news that all this stuff is going to be backed or, whatever, Dow futures. At the time of me making this video, it is very early in the morning. The stock market in the U.S. is not open. It says Dow futures jump 400 points as regulators announce a backstop of Silicon Valley Bank depositors. Everyone is already excited that once again the overlords are going to protect the people who have hundreds and millions and billions of dollars and will not hold anyone accountable for their actions when they almost, once again, were on the cusp of destroying the world markets. Tying into this directly, we have news that over the last week, you might have remembered, I was talking, and it is mainly on Twitter. For those of you who missed it, March was supposed to be the month. March was meant to be the time that we heard since last summer where interest rates were going to stop rising. The idea is that when you have over a 5% interest rate, It is meant to deter people from taking out debt. I told this to my friend yesterday. Hello, friend. If you are listening and are watching, I understand. If you're not, I get it. The cryptocurrency and financial markets can be very heavy to deal with every single day. The idea is that if interest rates are higher, you are less likely then to take out debt, to take out a mortgage, to take out a loan, to throw into a market, to throw into a home, to buy a building. How? If the interest rate is 0%, you go, well, this is basically free money. You take out a loan. If the interest rate is 10%, you go, I don't really want to pay back 1/10 of what I'm supposed to be paying back to these people every single month with a 10% interest rate. However, if you have a 5% interest rate, it's usually seen as kind of the golden number where people are less likely to take out a mortgage, or who will take out a loan for $20 billion to be able to build a building or to have a gigantic building project. However, people are still taking out debt. Why? Because people are greedy, and that's just what we do, and we're all trying to make money in some sort of way or another. So inflation has persisted. The Fed believed that by last summer, by this March, a whole 8, 9, 10 months later, we would see an inflation rate of probably between 2 to 3.5, something like that percent. This has not happened. Inflation remains remarkably high, and will probably actually remain this way for the foreseeable future. So instead of having the last interest rate rise in March, the head of the Federal Reserve, his name is Jerome Powell, announced that he and the other Fed members are discussing the possibility of continuing to raise interest rates over the course of this year. You heard that correctly. It's a gigantic downer. Why? Because markets were beginning to move up under the expectation that in March we would have the last interest rate rise up until, I believe it was supposed to be the end of this year or the beginning of next year, which is when the Fed would then reevaluate if they should potentially have another rate hike. This would have been exceptional for the markets to have 9 months to basically pump consistently, knowing that there wouldn't be any further interest rate hikes. Now, we're at the point where the Fed is talking about raising it multiple more times over the course of this year. And they openly announced, Jerome Powell said he is willing, you can find this, he said he is willing to push the U.S. economy into a recession or on the cusp of a depression in order to get inflation lower. The U.S., if you didn't see the thing I posted yesterday on Twitter, 40% of all U.S. dollars that are in existence were printed in the last 3 years. The world's system is collapsing around us, and very few people seem to be paying attention. The world's reserve currency cannot get its inflation under control, and the numbers that we continuously hear are also made up. Remember, I told you how a lot of people even measure inflation. You take a basket of goods and you say, based on these bananas and this apple and the cost of petrol and the cost of this, well, that's what inflation actually is. How many of you have gone to your local supermarket and you've seen that the bunch of bananas, the bunch of grapes, the juice that you bought, the bread that you got are not up by only 4% in price, but they're double or triple the price? That's the true impact of inflation. That's what inflation actually is. But as the people, as the government, the creators of the currency, you can't announce that inflation is actually 200 or 300% because it would cause everyone else to completely lose their minds. Nothing is currently only up by 4%. Nowhere. Not in one single place. So, off of the news of everything we just had, everything. Keep in mind everything we just spoke about. And this news that's on the screen, markets began to fall over last week. And the idea was that by the time we got to today, Monday, markets would begin to cascade, begin to fall down, and everything would be absolutely terrible for all of us. And this is where this comes in. Today, there is now an emergency meeting by the Federal Reserve. Yep, you heard that correctly. They have announced that they need to have an emergency meeting because of everything that's been happening over the last 2 weeks. Their idea was they were going to continue raising interest rates, and the news was they were going to raise it, or they still plan on raising it by 0.5% 3 more times, trying to get us near or as close to 6 to a 7% interest rate. The idea of a 0.25% interest rate appears to be out of the window. A lot of companies and institutions and analysts have been saying that the markets are now pricing in a 0.5% interest rise 3 more times over the course of this year. The emergency Fed meeting, no one knows what it is, what it's going to be. Wink, wink, why they're having it. But apparently, this is the actual thing from the Federal Reserve website. Closed board meeting on the 13th of March. People are expecting that they're either going to have an emergency discussion as to if they continue raising interest rates at all this year, if they're going to do it 3 more times as expected. And one of the craziest ideas that I saw, and I do not think this is going to happen. I do not. One of the expectations could be if things continue to get so bad for the markets that they may even announce a freezing of interest rates and also a lowering by 0.5% as well. I think that is the most unlikely thing that they're going to do. However, whatever they discuss, when we figure out what they're talking about, it is going to move markets like mountains. If they announce that they're lowering interest rates in a bid to bring back consumer confidence and bring back money into the U.S. market, we're on the cusp of a recession. You don't, and a lot of analysts even say that we are currently in a recession right now. Companies have fired anywhere from 20 to 35% of their personnel. We're in the mud right now. If they announce that they're lowering interest rates, markets are going to skyrocket. If they announce that they are doing just 1 more interest rate rise, I think it's supposed to be on the 22nd of March that we're supposed to hear from them directly, like when they stand on that podium. The 22nd of March, and we only have 1 more, markets are going to skyrocket. If we hear that these people, after all, and they're having this emergency meeting because of the collapse of the 2 banks and also the collapse of the economy. The World Bank and the, what's the other one? I can't remember the name of one of the other big money things on the planet, have apparently all spoken to the Fed in the last week, and they said stop raising interest rates. Because while it's bad for the world reserve currency and the U.S. markets, it's tearing apart every other market around the world, while we have these other issues that have also been bubbling for a number of years. They said that they're willing to crash the markets to get inflation under control, but they can't. And this brings us back to the very beginning of what I said. We will probably not this year be back to a normal 2% inflation rate. We're probably going to remain in the 5 or 6 inflation rate category for the literal foreseeable future. When the Fed is done raising interest rates and markets go back up, inflation is also going to rise. I still stand by my idea. We are going to see a 10 to 12% inflation rate for the US dollar, and it's just going to become a norm. If it does end up happening, it's going to be, now hear me out here. This is going to be one of the most terrifying things for a number of reasons. I mentioned before last year and the beginning of this year, the people who will benefit from the markets moving up the most is you. You will benefit because you're in the market. The other 90% of people who aren't in the markets, we are going to see poverty rates like we've never seen in our lifetime. If you watch the news, if you've been paying attention, for those of you who do not live in the States, if you're on YouTube open a new tab and type in like US financial crisis or US, I don't even know, like US rents, New York rents. There's thousands of videos floating around out there. We're living in a really unprecedented time right now where everything is collapsing around us, and a lot of people keep pretending that they're not. If we get to a 10% inflation rate once again with the US dollar, because they're not going to be able to get inflation under control while they're trying to make sure that the economy doesn't collapse and that jobs don't continue to fire people in mass, the crypto market's going to explode. We're going to see a $35,000, $40,000 Bitcoin. We're going to see a $7,000, $8,000, $9,000 Ethereum. The stock market will go to previous all-time highs. People will be making tons of money. But the opposite end of it, the inequality, and for those of you who don't care about inequality, you are going to care because it is going to affect you in very negative ways. And this is where we currently are. There. After all of that, that's what I had to tell you. I told you it was going to get completely insane. We are waiting for what these people now today have to say about this entire situation. What they're thinking about doing, what they may do, or what the next step is going to actually be. So, at the moment, the markets are pumping because of the news that the government is going to back the Silicon Valley Bank deposits. The Fed is having an emergency meeting today, and it is going to move our markets. We are either going to go down, I know it sounds stupid, or we are going to go up. There are no other ways. We are not going to trend sideways after we hear what they have been discussing. There's so much to cover, like all the time. Like, I wish you understood the severity of this, and I know that there are people out there who do. Like, I get it. But when I talk to other people about what's happening, a lot of people just really don't care, and they don't understand how much that it affects them. But this is similar to, I think a lot of people, and I think because of stress and just life, we tend to try to place ourselves in the moment or in today as much as possible. Even if we are forward thinkers, we look around today. I have to watch where I'm walking today. What am I eating today? It's the same when I try and talk to my friends about investing for the future. Hey, are you trying to buy a home? Do you have any money saved? Do you have any, even when I make videos like that on Money Rules, the other channel, and I talk about saving or putting away for a rainy day, do you think those videos get a lot of views? Of course they don't. So on the news that things might be collapsing, there might be a contagion, there might be something wrong with the system or something so-and-so, everyone goes, oh, wow, that's crazy, because tomorrow doesn't exist for them. 3 weeks ahead don't exist for them. But then when they lose money, it's always this like, what? How did that happen? I don't understand. Anyway, yeah, so that's where we currently are right now. I think things are going to get rough unless we start getting news of like a literal bailout, which is also in the cards. If we hear over the course of this week that the government's going to make sure that they have extra backing for other banks and all this other stuff, a lot's going to happen. So yeah, that's the fraction of the news that's currently happening right now. Hold on. I always forget this. I don't know how I always forget it. Literally every single day. I don't understand why my brain does this. Nope, wrong one. Wait for it. Wait, what is that? What? Okay. I had orange juice written there. Maybe it was like a shopping list or something. Okay. Let's move on. As always, a very special thank you to my Patreon supporters: American Crypto Academy, Martin Steuer, Bodie McBoatface, Sam Ratter, Dotha Diddy, Manny Cryptos, Crypto Gambino, Auspicious Agile and Blockchain, Jamie Saad, and let's move on, Empire Queen, Roman Gaba, Bitcoin Ben, Arachno Dave, The Dealer's Den, Captain Something in the Z-Way Lay, Mo Barazi, VB Nerd 21, Lauren De Silva, Quoted Biddy, Troy Allgood, Space Case, Need a Miracle, Paternoster, Navarro Williams, Utopia 569, Moonman High, XRP, Nostromo, John Sarson, The Anima, Rita, Bibliophobia, Adam Graysick, Wise Night Owl, 242 to the World, Bankroll Network, Crypto Artist, Coldy 3D, Setsuna, Paxis, Jim Gardner, Jeremy Fox, Minting Coins, Yes to Crypto, Anytime Fitness, Monk's Corner Staff, Bake Me a Cake, Tigger Ramachanisa, and Don't Crypto with Lionel. Thank you all very, very much for your support. Thank you to everyone who is a member of the channel. Thank you to everyone who has left a like, who has commented, who has tried to raise the algorithm in any sort of way. I do thank the living heck out of you. At the moment, Bitcoin is at $22,080. It is up by 8.35%. Ethereum is up by 7.8%. It is a couple of dollars away from $1,600. Cryptocurrency prices are so the word's not repressed. It's like depressed, or like something with an S at the end of it. We should be so much higher. We should be so much higher in prices. And I understand that the macro situation also is a complete mess right now. But I was reading an article that was talking about where Bitcoin was and where Bitcoin currently is. And when you read an article or go over the situation like that, Bitcoin's price is $2,000 higher than it was in 2017. Think of how many more people have been accumulating Bitcoin, are using Bitcoin. Bitcoin was not transacting trillions of dollars every year on its blockchain. Tons of Bitcoin was not locked up in other protocols, and we've only gotten $2,000 higher. Nothing that's been happening is priced into any of these coins. Even the upgrade for Ethereum, we are, was it $200 higher also than we were in 2017. Nothing is making a lot of sense. Binance coin is up by 7. XRP is up by 0.19. There were fears that the company Ripple might have had exposure to one of these banks. Every company had exposure to these banks. All these companies work together and swap money around each other. They all had exposure to these banks. I don't know how, if you don't speak English, maybe put on the subtitles at the bottom or something. I can't make that any clearer. Cardano's up by 9%. Dogecoin is up by 4. Tron is up by 10. Anything else like spectacularly crazy? Litecoin is up by 10 as well. Ethereum Classic is up by 11. Filecoin is up by 18%. Something called Aptos is up by 12% as well. The market's in green. A couple of coins that's a stable coin, are lightly in red. The Graph is up by 15. Phantom is up by 10%. Stacks is up by 21. And I assume in those last couple of seconds, XRP is now in the red. Where is it? That's close. Yeah. I hope that you've all enjoyed this video. I hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I hope it's absolutely fantastic. Pay attention to the news. Pay attention to what's going on. It is going to affect the money inside of your wallet. And yeah, talk to you all soon. See